Let's put the focus then on some earnings that we've got from a Justdial. A strong quarter reported by the company. I'll take you through some of the headline numbers. Revenue saw an uptick of 10.2%, came in at 200.4 crores this time around. EBITDA as well jumped 39.3%. Margins expanded from 24.6% last time to 31% is where the margins stood for the fourth quarter. And of course, the big number was the net profit number. Saw a jump of 53.7% as far as a Justdial goes. In terms of the traffic and visitors that they see to the site, 111.6 million is the number that we're working with in the fourth quarter, and that's versus an 86.8 million. So clearly a big jump coming in for the company as well. In fact, we have the management of the company joining in now, to really give us a sense of what really went through in the quarter gone by. That's Abhishek Bansal joining in to really give us a sense. The Chief Financial Officer at Justdial joining in now. Abhishek, good to have you on the show. Clearly a strong quarter this time around. Give us a sense of what factored into this performance, what worked for you this time?
See, this particular quarter, firstly on the traffic, we had about 112 million unique users for the quarter, which grew about 29% year on year. In terms of revenue growth, we have achieved the much awaited double-digit revenue growth. So revenue was at about 200.5 crores, which grew 10.3% year on year. On the margin fronts, margins were very healthy at about 24% for the quarter. So EBITDA saw about 42% year on year growth. Overall bottom line profitability again was very strong. PAT grew about 54% year on year. So overall it was a good quarter for us.
All right, so overall seeing good metrics across the board. Give us a sense then, how did collections and unearned revenues look in the fourth quarter? And also, what were the collections that you saw if we talk about Tier 1 and Tier 2 cities?
See, if you see our particular unearned revenue as on 31st March stood at about 333 crores, which grew about 21% year on year. Recent trends of collections have been extremely healthy, which obviously reflects in unearned revenue. In terms of mix between Tier 1 and Tier 2, Tier 3 cities, Tier 1, which we define as the top 11 cities, contribute about 79% to our revenues. Rest Tier 2, Tier 3 cities contribute about 21% or so.
All right, so 79% contributed by Tier 1. Let's talk about your unique visitors split then. If you look at the mobile unique visitors, that has gone up quite significantly. It's coming at 71%. That's an uptick from 60%. Slight pressure coming in for the voice and web segments. But talk about the mobile unique visitors then. What has led to this strong growth?
See, mobile traffic, which now contributes 71% of our traffic, has been growing extremely strongly. Last quarter had about 51% year-on-year growth in mobile traffic. We expect mobile to continue to gain share, and the growth rates that we saw in fourth quarter, I think those kind of growth rates could very well sustain in coming quarters as well.
All right, so considering this increase that you've seen in the share of mobile traffic, what is the outlook now on employee costs going ahead?
See, in terms of employee cost for the full year, if you see, we ended the year FY18 at almost the same employee cost as last year. So we had extremely tight control in terms of some of the manual functions being replaced by automation. For FY19, I expect employee cost to broadly increase in line with whatever are the inflation trends.
All right, so looking at an increase as far as employee costs then going ahead. Let's talk about any new products and services. If you could give us a sense of what was added in the fourth quarter and what plans do you have for FY19 as well?
See, in last quarter, the biggest achievement that we had that about 2 weeks back, we launched the revamped version of our mobile site. If you go to the latest version of our mobile site, justdial.com, it is blazing fast. We have cut our page load time by approximately 40%. We have added certain new features, curated content as well. The revamped version of the iOS app also has been launched about 2 weeks back. The Android version is expected to be released shortly. So these particular 3 products are Android app, iOS app, as well as our mobile site. They would continue to see significant improvements in terms of new features addition as well as improvement in terms of speed and user experience.
All right, so clearly the focus then remains with the mobile space as well going ahead. Give us a sense then on what the outlook is as far as ad expenses go, because considering the increasing competition that we're seeing in the space, any outlook that you have for ad expenses?
See, advertising spend, we had about 65 crores overall advertising spend for last full year versus 28 crores in previous year. So advertising, we realize that it's an integral part of growing our particular user base, keeping ourselves refreshed in users' minds. We do intend to spend around anywhere between 8 to 9% of our top line in advertising spend for coming fiscal year.
All right, fair enough. Abhishek, if we talk about your core client base, then that is, the entire small and medium enterprise space. SMEs have been under pressure for some time. Do you have any outlook for this space? Do you expect an improvement going ahead?
See, definitely, yes. So in recent quarters, we have seen better traction in terms of our sales and collections, which obviously originate from SMEs. So the structural changes that have been taken in the economy have impacted SMEs, but things seem to be stabilizing now, which is also reflecting in our improvement in revenue rates, unearned revenue rates. So we expect that a more conducive environment for SMEs should obviously augur well for us as well.
All right, expecting an improvement then as far as the SME space goes going ahead. Just a last question, Abhishek, before we let you go. You've seen, a strong fourth quarter, revenue seen a good uptake, bottom line as well looking strong, a 53% jump coming in. Then more importantly, margins also saw a good expansion. Overall, if we talk about fiscal 19, then what is the outlook you have? What do you see really driving growth going ahead?
See, FY18, we are exiting at a very strong growth rate of 10.3% year on year. FY19, we definitely want to build onto those particular growth rates, achieve teens growth rate for the entire year. Margins, what we achieved in FY18, say 20 to 23%, I definitely think should be sustainable. We could see margin expansion as well due to operating leverage. Thirdly, and most importantly, on the user front, FY18 saw very healthy year-on-year user growth. We would want to ensure that we maintain similar growth in our user base for FY19 as well. So in order to summarize, three key areas that we want to focus on: user growth, revenue growth, and that particular revenue coming at healthy margins.
All right, we'll leave it at that, Abhishek. Thanks so much for joining in. Pleasure having you on. A strong quarter there from Justdial, and that is Abhishek Bansal, the CFO of the company, really giving us a fine print into what led to that performance this quarter. Let's put the